Amplats' outgoing CEO, Natascha Viljoen, says the operational challenges which pushed its first half profit 71% lower have been resolved and performance will improve for the rest of the year. The miner has maintained its production guidance for 2023 at between 3.6 million ounces and 4 million, despite a 13% decline in refined output in the first half. Viljoen, who will soon leave the company to join Newmont as Chief Operating Officer, said the appointment of her successor was imminent. Nastassia Arendse spoke to her for more.
I think, Nastassia, it was a difficult period, and if we look at the complex operating environment that we've seen a 29% reduction in our basket price. We've seen the 7% reduction in our operational performance. Expected, though, that wasn't unexpected. We have seen some short-term operational challenges that we've worked through and we fixed. So despite the fact that it was a challenging first half, I think we're well set up for the second half, and we're well set up then to deliver well within our market guidance for the full year.
Let's talk about those short-term challenges and hone in on Mogalakwena and Amandelbult. And also, maybe you can take us through some of, from an OPEX point, or rather from an operational point of view, whether those headwinds, you've basically gone through them and you're ready for the second half.
So firstly, let's start and talk to Mogalakwena. I think the end of last year, we've reset our 3-year guidance on Mogalakwena specifically because of the area that we are going to mine in this medium term. It is just a function of where we were mining in the ore body. It is a vast ore body, polymetallic, and it is quite variable throughout the ore body. And for this near-term period, we will be mining in areas with lower grade. We are offsetting that already with higher throughput through our concentrators. And we will see that going into the second half, some of our short-term operational challenges with mining equipment and dumping space have been largely resolved. And we will enter into a period that we know that we continue to deliver and make up some of what we fell behind on in the first half. We also, that is flowing through into our operational cost, where we have now been able to replace high cost equipment with lower cost equipment, higher cost operational activities with more efficient operational activities. So it will also be supporting the second half in terms of operational cost.
Right. For the benefit of our viewers who have perhaps call it a basic understanding of what happens in the commodity space, and especially in the mining side, take me through what you believe to be the underlying story right now when you look at PGMs as it relates to supply and demand.
That is a really good question. So I think, Nastassia, the first thing we need to understand is that more than 80% of the world's platinum group metals come from South Africa. So we are well endowed with platinum group metals, and it is a critical mineral for us going forward in current internal combustion engines to clean the air through autocatalytic converters, but also playing a very important role in the decarbonisation of mobility going forward with the role that it plays in hydrogen, clean green hydrogen, and also fuel cell electric vehicles. I think that's probably the two most important factors that we need to understand. As South Africa, we therefore continue to play an important role with the supply of PGMs generally into the market. When we look at our market, it has been fraught with uncertainty from just before COVID. Firstly, we have seen the uncertainty when everything closed down and markets basically totally collapsed on us. And we saw a slow but steady comeback after COVID. We've seen light vehicle production increasing until we saw the broader impact of COVID on the supply chain that again impacted supply and demand for light vehicles. We saw the global uncertainty around Russia and the Ukraine, and also around the uncertainty in the economy, inflation, China coming back, etc. So that market has been very uncertain in the last 3 years. Saying that, however, we're starting to see slow and steady going back to pre-COVID levels. We see electrical cars coming in and taking a portion of the internal combustion engine market. Important to note that electrical vehicles is not only battery electric vehicles, but that fuel cell electric vehicles will play an important role into the future. Now, many of our listeners might be less informed about fuel cell electric vehicles, and it's been predominantly impacted by our ability to produce green hydrogen economically. The reality is, with quite a bit of policy and in financial support, we have seen the hydrogen economy now growing at a steady pace, and we see more and more end use of fuel cell electric vehicles. We see a number of our OEMs now having fuel cell electric models. We, as a company, have just deployed 100 taxis with Toyota Mirai, specifically in Berlin, to showcase the end use. So it's a very well-developed technology. It is now about developing the value chain for us to develop that additional market for our product.
One of the things that has been probably a common theme when you look at a lot of the listed companies that released their results recently has been the issue of load shedding. And it's quite interesting to see how the different sectors are either affected by it directly or indirectly. When you look at your operations, what has been the impact of load shedding, perhaps even specifically stage 6, and the kind of flexibility you needed as Amplats in order to mitigate some of the risks or the impact on production?
So, Nastassia, we distinguish between load shedding and curtailment. Because we're an intense user, we generally get curtailment to 2 levels lower than load shedding, because Eskom use us as base load balancing as well. So generally, because of the fact that we're part of an intensive user, we get targets that we need to cut back on, but we can manage where we take it out of the value chain. And we target that impact in areas that will impact the long-term production the least. So generally, if we look at the value chain all the way from mining into refining, we protect our mining and concentrator operations and cut back on smelting and refining. That's also where our highest intensity is, but we do have catch-up capacity in those areas. So what you'll see in our results, we have built up about 66,000 additional ounces in our value chain due to the fact that we didn't get it through the value chain. But because we've got catch-up capacity, we will get it through. It's not lost ounces. We talk about it as deferred ounces. As part of that intensive user group, we have the opportunity to work closely with Eskom, understand their plans, and then work with them to mitigate the impact of curtailment and how we manage our operation to mitigate as far as possible.